As an investor, the most important aspect in your investment strategy is having a well-balanced and refined portfolio. And by this, we mean that a portfolio that caters for both your return needs, liquidity preference, and also caters for your risk profile. There's been a lot of conversation in regards to how investors are able to incorporate both asset classes such as mutual funds to cater for their liquidity and also real estate to cater for their returns. Let's take this scenario. This investor who wanted to develop in his piece of land, and he wanted to do rentals. And as you know, real estate is really capital intensive, and also it takes time to develop and exit. So for this particular investor, what he did, he just put some money aside in a mutual fund, earning a return of an average of 10%. And every month he will get a return of over 150,000 to go into developing his real estate. As an investor, you may be looking to develop in future. You may be looking to buy maybe a plot of land in future. So how this can work currently, you can put aside part of your funds in a mutual fund or a collective investment scheme, and it will be giving you a return, enabling you to have liquidity to continue with your development. We've also seen a constant increase of costs and prices of building materials, meaning that if you're going to build in 2 or 3 years' time, you'll need much more capital than you would have right now. So what do you do to ensure that when you start your development, you won't be able to incur much cost in terms of the quantum of funds that you'll be using? So the first thing you should do is to set the money aside today. By putting aside your cash in a money market fund or any fund that is giving you a consistent return, you'll be able to beat inflation, and also you'll be able also to have cash for any unseen or unprepared expenditures. Building costs over the last 5 years have increased by over 15% per square foot. So what does that mean for you or for someone who wanted to construct a house in 5 years? That means they'll use 15% more than they had budgeted for. What if this particular individual put that money aside in a money market fund, earning a compounded return of maybe 10 to 12%? They'll be able to take care of any increase in prices and also have some funds left as profit from the investment that they made. Real estate projects demand a lot of cash, and that cash flow can be provided by your investment in a money market fund, because first you're able to access your funds anytime and in good time, and also since you won't most probably need the cash in bulk, then you'll be able to be withdrawing as the project proceeds. So what's the main benefit of that? First, your project keeps on going as your money still earns you interest in a money market fund. To get this investment plan, whereby you'll be able to build your home and at the same time get consistent returns in our investment, reach us at invest@nabocapital.com and we'll walk the journey with you.